Now let's talk about China. Xi Jinping's pet project is making a comeback. We're talking about the BRI, the Belt and Road Initiative. China is back to building bridges, roads, railways and ports and ensnaring countries into debt. And China has signed 176 new deals. These are deals worth $124 billion. 176 deals for just the first 6 months of the year. That's more than what they did in all of last year. That means the BRI has ballooned. The total value now is well above $1 trillion. That's what all the BRI contracts and investments are worth, $1 trillion US. This includes construction contracts, which are valued at $775 billion, and non-financial investments worth more than $500 billion. These could be investments towards infrastructure. And who is the biggest recipient of these funds this year? It's Kazakhstan. Kazakhstan has received $23 billion in BRI investment. That's the highest for any BRI partner. This was followed by Thailand. They have received over $7 billion. Egypt comes third at $4.8 billion. And what about Pakistan? Did they see any surge in investment from China? Well, none at all. In fact, Beijing is cutting back from CPEC. CPEC is the China-Pakistan Economic Corridor. CPEC was one of the largest and most high-profile BRI investments. Beijing committed more than $60 billion to it, but today CPEC is a laggard. China's rate of investment has fallen by 54%. Their latest GDP numbers came out this week. China's growth rate stood well above 5%. These numbers are for the first quarter, that is, the last 3 months. This seems like good growth. But the fact is, China's domestic economy is struggling. The property sector remains in an extended slump. Demand for new homes is still tepid. It has fallen below 5 million units a year. At its peak in 2017, 20 million new homes were being sold in China, but now that figure is less than 5 million. That's a drop of 75%. Plus, unemployment is rising, especially among the youth. Almost 15% of China's youth is jobless. There aren't enough new jobs being created. Deflation is another warning sign. Prices of goods are falling year on year. So consumers have postponed major purchases. They're holding off on spending because they expect the prices to fall further. And that may work for consumers to buy what they want for cheap. But for China's economy, it is a red flag. Falling consumption will impact their growth prospects. It is prioritizing Xi Jinping's ambition over the people of China.